എടുത്തറ ഇരിക്ക് പോയിരിക്ക് அப்படி பேசிருக்கிறேன்
Right. Today I'm going to discuss EPF and ETF adjustment. EPF mean Employee Provide Fund as well as Employee Trust Fund. Those are legal requirements. In accounting, we are going to provide information. For that, we have to prepare financial statement. Therefore, when business going to prepare financial statement, legal factors also we have to consider. Separate act available for EPF as well as ETF, Employee Provide Fund as well as Employee Trust Fund. All the business organization available employees. Therefore, we have to discuss like this adjustment. Therefore, we have been discussing lesson 6, sole proprietorships. This is adjustment, part of lesson 6. As an adjustment, we have to discuss under this level. Inventory adjustment, we have discussed already. As well as bad debts and doubtful debts adjustment, it is equal impairment loss on trade receivable and allowances for expected losses on trade receivable. That part also I have discussed, but some example I will discuss again. As well as damage stock adjustment we have discussed. And today I am going to discuss EPF and ETF adjustment. As well as we have to discuss goods sent on sales or return basis adjustment, as well as disposal adjustment, and accrual expense as well as prepaid expense adjustment. We are going to discuss how to prepare financial statement for sole proprietorships. Under A level, we have discussed there are 4 organizations: sole proprietorships, partnerships, company, and not for profit making organization. There are 4 organizations we have to discuss under A level. You have to know how to prepare financial statement each and every organization. When we are going to prepare financial statement, from the beginning, information should be collected by using source document. After that, information included in the source document should be recorded in the prime end books. Then information included in the prime end books should be recorded in the ledger accounts by using double entry system. Then by closing ledger accounts, trial balance can be prepared in the general ledger. We have discussed that part already. Therefore, now you have to know how to prepare financial statement based on trial balance. Therefore, when business going to prepare financial statement based on trial balance, we have to do some adjustment. In this level, as adjustment, you have to know how to adjust inventory adjustment, bad debts and doubtful debts adjustment, depreciation adjustment, prepaid expense and accrual expense adjustment, damage stock adjustment, EPF and ETF adjustment, goods sent on sales or return basis adjustment, disposal adjustment. Therefore, you have to know how to prepare financial statement with those kind of adjustment. Therefore, today I am going to discuss EPF and ETF adjustment. Right, think about this example. It has given like this. This is the trial balance. Today I am not going to discuss how to prepare income statement. Now I am not going to discuss how to prepare financial statement. Only I am going to discuss how to adjust EPF and ETF adjustment. Right, think about this one. This is trial balance. And trial balance, it has given debit side, salary available. Think about all the business organization employees available. Therefore, salary should be paid. Think about this part, very important. Salary available, debit side of the trial balance. This is the trial balance, 450,000. And think about adjustment number. Second one, this one, think about. This is EPF and ETF adjustment. Very important. You have to know how much should be included in income statement as salary. Think about this one. It has given employer. Employer mean business. Contribution for EPF and ETF. Just think about. I will discuss adjustment. I want to give rough idea how to adjust. That it has given employer business contribution for EPF and ETF. It has given 15% and 5%. respectively on the gross salary of the employees. And ETF, it has given EPF contribution of employee mean workers is 10% on their gross salary of the employees. Both company and employee contribution for EPF and ETF has not been recorded. This is the way it has given adjustment. Trial balance available salary. Think about, we have discussed how to record salary on the income statement. Normally salary should be included under administration expense. But now 450,000 cannot be included in income statement. This is not correct value. There is adjustment. Therefore, you have to know how much should be included in income statement as a salary. And it has given employer contribution as well as employee contribution for ETF and EPF. Employee provide fund, employee trust fund. Adjustment, this is a legal requirements. There, it has given separate act for EPF and ETF. Legal environment we have to consider when we are going to provide information. Right? This adjustment, it has given partnerships, company, any organization. All the organization available employees. Therefore, this adjustment, they ask any type of business. As financial statement, we have to prepare sole proprietorships, partnerships, and company, as well as not for profit making organization. All the organization employees available. Therefore, this adjustment available all the sums. It means all proprietorships sum, partnership sum, and company sum. Therefore, you have to know how to adjust. How much should be included as expense in the income statement. Right. Think about employee provide fund. It has given both employee and employer contribution. Now think about this part, very important. This is the theory. Think about this one. It has given employee provide fund, employee contribution, and employer contribution. It has given percentage 8% and 12%. But employee trust fund, only employer give their contribution. Employer mean business. Employee mean workers. Think what, there are two funds relevant for employees. Employee provide fund, employee trust fund. For employee provide fund, both employee and employer give their contribution. This is a legal requirement. But ETF, only employer give their contribution. Right. Now think about this one. Employees available in the business organization. Think about, if there are employees in the business organization, salary should be paid. Salary. And think about the separate act available for EPF and ETF. Business, that's employer, as well as employees. Employees mean workers. Think about this part. This is the business. All the business available like these employees. And this is a central bank. First one, try to get idea. We are going to provide information on behalf of the business. In the business point of view, this is a central bank. And EPF and ETF fund maintained by the central bank. Fund එක තියෙන central bank එකේ. Employees available all the business organization. First fund, try to get idea. What is the EPF and ETF? How to adjust? If there are employee in the business organization, in the business point of view, salary should be paid. Think what, salary should be paid, but after retirements. දැන් මේගොල්ලෝ වැඩ කරන දවස්වල පඩි ගෙවුවට retire වුණාට පස්සේ පඩි ගෙවන්නේ නැහැ. After retirements, they will not be able to get salary from the business. Think about after retirements. පඩි ගෙවන්න වැඩ කරන දවස්වල විතරනේ. ඊට පස්සේ පඩි ගෙවන්නේ නැහැ. Therefore, after retirement, they will not be able to get salary from the business. Therefore, they have to face some financial difficulties after retirement. Therefore, this is a legal requirement. Separate Act, EPF Act as well as ETF Act. For EPF, both employee and employer give their contribution. එකනේ හම්බෙන පඩියෙන් කොටසක් යවනවා employee කොටසක් යවනවා and employer ඒ පඩියෙන් කොටසක් යවනවා central bank එකට. EPF and ETF fund maintained by the central bank each and every month based on salary. Think about those are the employees. මේගොල්ලොන්ට හම්බෙන salary එකෙන් කොටසක් employees ලා යවනවා and employer also give their contribution. This is the central bank. Therefore, EPF and ETF fund maintained by the central bank. Therefore, think about business point of view. We are going to provide information in the business point of view. Therefore, fund maintained by the central bank. For EPF, both employee and employer give their contribution. එකනේ EPF and ETF fund එක තියෙන central bank එකේ හැම මාසෙම හම්බෙන පඩියෙන් කොටසක් employee යවන්නත් ඕන, employer යවන්නත් ඕන for EPF. But ETF only employer. Employer mean business give their contribution. හැම මාසෙම හම්බෙන පඩියෙන් employee and employer ඒ දෙන්නම යවන්න ඕන EPF fund එකට. But ETF fund only employer give their contribution each and every month. Therefore, you have to know how to record in the business point of view. Retire වෙනකන් central bank එකේ තියෙන fund එකට සල්ලි යවනවා. Like a savings accounts. ඒතර ඒකේ සල්ලි එකතු වෙවි තියෙනවා. retire වුණාට පස්සේ ඒක අරන් ජීවත් වෙන්න පුළුවන්. Therefore, you have to know how to record in the business point of view. Why we have discussed this kind of adjustment? Employees available. All the business organization employees available. Therefore, this is a legal requirements. Each and every organization they ask this kind of adjustment. This is a theory. For EPF, both employee and employer give their contribution. Employee පඩියෙන් 8% employee give their contribution and 12% employer give their contribution. එකනේ මේ දෙන්නම එකතුලා 20% යවනවා බලන්න. කොහොමද යවන්නේ? Central bank එකට. පඩියෙන් යවන්න. Therefore, you have to know how to record in the business point of view. අන්නෙම retire වෙනකන් යවනවා central bank එකට. Like a savings accounts. බැංකුවේ සල්ලි දානවා වගේ central bank එකේ account එකක් තියෙනවා අපි නමින් employees ලගේ නමින්. අන්න ඒකේ fund එක එකතු වෙවි යනවා. After retirements ඒ සල්ලි ටික අපිට ගන්න පුළුවන්. Right, you have to know how to record in the business point of view. EPF and ETF adjustment. Think about it as given like this. Think about trial balance available salary 450,000. Therefore, this value cannot be included under administration expense as expense now. Salary, this is not correct value. And think about adjustment. Adjustment not recorded yet. It has given employer contribution for EPF and ETF. It has given percentage 15%, 5%, respectively on the gross salary of the employees. And EPF contribution of employee 10% on the gross salary of the employees, both company and employees. It means business and employees. Contribution for EPF and ETF has not been recorded for entire year. Right, now think about adjustment. This is a basic part. We have to provide information on behalf of the business. EPF and ETF fund maintained by the central bank. Why we have discussed this kind of adjustment? There are employees available in the business organization. Now this is the theory based on EPF Act. Based on EPF and ETF Act, this is a percentage. For EPF, both employee and employer give their contribution. But employee trust fund. Only employer give their contribution. Right now, think about example. This is the first one. EPF contribution of employer 12% and employee 8% of the gross salary of the employees, and ETF contribution of employer is 3% of the gross salary of the employees. If gross salary of the employees of the business is 20 million, think about business point of view. Think about government factories. There are more employees available. Therefore, business point of view, this is the total salary. Think about salary paid in cash. If it has paid in cash, cash account credit, salary account debit. Now it has given EPF and ETF also. Think about percentage. This is a legal requirements. Employee 8%, employer 12%. මේක අඩු කරන්න බෑ මීට වඩා වැඩි වෙන්න පුළුවන්. Sometimes it has given 10% and 15%. But this is a legal requirements. 8% and 12%. ETF only employer 3%. මේට වඩා අඩු කරන්න බෑ percentage එක වැඩි කරන්න පුළුවන්. Sometimes it has given in the paper employee 10% and employer 15%. And ETF it has given employer 5%, sometimes it has given. But this is a legal requirements. Right now think about this is a adjustment. Sometimes it has given like this also. Question number 4th one, think about. Try to recognize difference. And sometimes it has given. Think about question number 8 one. It has given salary and EPF payable also. Try to recognize difference. Right now think about question number 1. Very important adjustment. All the organization it has given like this adjustment. Right, first one. All this stuff I have discussed from the beginning. Right, first one, read carefully. EPF contribution of employer. Employee mean business is 12% and employee 8%. This is a percentage for EPF. EPF mean employee provide fund. 8% of the gross salary of the employees, gross salary, and ETF contribution of employer, think about only employer, 3% of the gross salary of the employees. Based on salary of the employees should be calculated. If the gross salary of the employees of the business is 20 million, now there's relevant ledger account for the year end 31st March 20. That this is the adjustment. It has given EPF and ETF percentage is given. Right. First one, think about EPF and ETF. Think about these workings. First one, think about EPF and ETF. Employee provide fund. EPF. As well as this one ETF. For EPF, both employee and employer give their contribution. Employee mean workers, and employer mean owner, business, and ETF only employer, ETF also only employer. It has given percentage employee. In this example, it has given 8%. Sometimes it has given 10%. And employer is given 12%. But ETF only, it has given employer 3%. 3%. This is the percentage. Think about EPF and ETF. EPF, both employee and employer give their contribution. But ETF only employer give their contribution. First one, try to get idea. And ETF only employer. Employee provide fund. Employee give their contribution. Employer give their contribution. But ETF only employer give their contribution. Each and every month based on salary. Both employee and employer, their contribution should be transferred to the central bank. හැම මාසෙම හම්බෙන පඩියෙන් employee 8%, employer 12%. salary එකෙන් යවන්න ඕන central bank එකට. You have to know how to record in the business point of view. An ETF fund also available in the central bank. Only employer give their contribution. Right now it is given, gross salary is given. Based on gross salary should be calculated. Gross salary is given in this example 20,000. Therefore, based on gross salary, 8%, 12%, and 3% should be calculated. That calculate values. Think about values in 1,000. Here take only 20,000. Values in 1,000. Values in 1,000. Therefore, 20,000 into 8%. And here 20,000 into 12%. Based on gross salary should be calculate value. ETF only employer give their contribution. It has given percentage 3%. First one take the values. Therefore, here 8% equal 1,600. And here 12% equal 2,400. And here 3% equal 600. Think about this is value should be transferred to the central bank each and every month based on salary. For EPF, both employee and employer give their contribution and given gross salary of the employee, but employee give their contribution 1,600, 8%. Employer give their contribution 12%. Think about here total value equal 4,000. Each and every month based on salary, 4,000 should be transferred to the central bank from employee salary. Employee give their contribution this value, and this value business give their contribution. Business. ETF this value should be this value business give their contribution. Only employer mean business. Right now they ask relevant ledger accounts. Think about this is a way when business going to pay salary to the employee. Think about salary equal to 20,000. But employee also give their contribution. Therefore, when business going to pay salary to the employee, contribution of employee should be deducted. Balance part paid in cash. Salary එක 20,000 උනාට සල්ලි වලින් ගෙවනකොට ගෙවන්නේ එයා central bank එකට යවන්න ඕන ගාන අඩු කරාට පස්සෙන value එක. Right, this is a way. Think about when business going to pay salary to the employees. As a salary paid after deducting contribution of employee. Try to recognize steps. Therefore, gross salary is given. Think values in 1,000. Gross salary is given. Values 20 million gross salary. Therefore, this is a way. Gross salary is given. Very important adjustment. It has given 20,000. Think values in 1,000. Gross salary is given 20,000. But when business going to pay salary to the employee, contribution of employee should be deducted from salary. Balance part paid in cash. Salary එක 20,000 උනාට ඔක්කොම සල්ලි වලින් ගෙවන්නේ නැහැ. Employee also give their contribution for EPF. Therefore, when business going to pay salary to the employee, contribution of employee should be deducted from gross salary. Balance part paid in cash. Therefore, here minus Think about steps. Minus EPF, employee contribution of employee equal 1600. This value should be deducted from the salary and balance part paid in cash. Balance part paid in cash, it is called net salary. Therefore, 20,000 minus 1600, 18,400. This is a value paid in cash. It is called net salary. Think about this step, very important. All the organization it has given like this adjustment. Reason, employees available, all the business organization. In accounting, we are going to provide information. Therefore, you have to know how to provide information. For EPF, both employee and employee give their contribution, but ETF only employee give their contribution. And think how to calculate value. As well as when business going to pay salary, contribution of employee should be deducted from gross salary, balance part paid in cash. Therefore, this is value paid in cash. This is called net salary. Salary equal to 20,000, but employee also give their contribution. Therefore, contribution of employee deducted from gross salary. This is the value paid in cash as a salary. Think about cash account credit, salary account debit. Net salary paid in cash. That is a value included in the trial balance. Therefore, now you have to know how to record in the business point of view. This is a value should be paid in cash. Therefore, this is step number 1. Think about EPF, ETF. For EPF, both employee and employer give their contribution. It has given percentage. And value should be calculated based on gross salary of the employees. Think about business point of view. There are more employees. Therefore, based on total salary, we have to record based on business point of view. Value should be calculated based on gross salary. Then think how much paid in cash to the employee. Salary 20,000 unata, total 20,000 ma givanne naha. After deducting contribution of employee, balance part paid in cash. Therefore, when we are going to record in the ledger accounts, there are 4 steps should be applied. Now think about theory part. Those are the steps you have to apply. Therefore, step number 1. This is step number 1. Step number 1. Therefore, this is the step number 1. First one, think about steps. And second steps. This is step number 1. And second step, contribution of employee. This is step number 2. And step number 3. Think about steps. And this is step number 4. There are 4 steps should be applied when recorded in the ledger account, each and every organization. Therefore, this is step number 4. First one, how to calculate. Then think about steps. There are 4 steps should be applied in the business point of view. This is the theory. For EPF, both employee and employer give their contribution and given percentage and gross salary also given. EPF divided by 2 part, employee contribution as well as employer contribution. Value should be calculated based on gross salary. Then when business going to pay salary to the employee, after deducting contribution of employee 1600 should be deduct from employee. Only employee contribution. Employer contribution cannot be deduct from salary. That is another expense. Think about salary equal to 20,000, but not paid in cash 20,000. paid in cash after deducting contribution of employee. This is value paid in cash. It is called net salary. Then when we are going to record in the ledger account, there are 4 steps should be applied. This is a net salary. This is value paid in cash. Think about paid in cash as a salary. Think about double entry. Effect for cash decrease. Therefore, cash account credit, salary account debit. There are 4 steps should be applied, and you have to prepare. There are 6 ledger accounts. Right, first one, prepare the ledger account also. There are 6 ledger accounts you have to prepare. Very important adjustment. There are 6 ledger accounts. That first one, think about step number 1, net salary paid in cash as a salary. This is a value should be paid in cash as a salary. Therefore, this one effect for cash account as well as salary accounts. Paid in cash, think about double entry. Cash decrease and salaries expense increase. Asset decrease, expense increase. Therefore, there are 2 ledger accounts for that. Salary accounts as well as cash accounts. Paid in cash 18,400 as a salary. Therefore, cash account credit, salary account debit. That is step number 1. Salary account debit 18,400 as a cash name of other ledger account, and cash account credit 18,400 as a salary name of other ledger accounts. Cash account credit, salary account debit. This is step number 1. Step number 1. Think about steps. Cash account credit, salary account debit. That is value paid in cash. Right. Then think about second steps. Think about double entry. Take values in 1,000, rupees 1,000. Salary account debit, cash account credit, paid in cash as a salary. Then second steps, think about step very important. Employee contribution 8%. Employee also give their contribution for EPF. Therefore, this is a part of salary. Think business point of view. Then salary balance 20,000 තියනවා. Making salary වලින් ගෙවන employees ලට 18,400. And balance part should be transferred to the central bank. Think business point of view. Business එක පැත්තෙන් බලනකොට 1,600 central bank එකට ගිහිලා තියෙන්නේ. 18,400 paid in cash for the employees. Therefore, both value outflow. 20,000 ම business එකෙන් එළියට ගිහිලා බලන්න. 18,400 paid in cash as a salary and 1,600 transferred to the central bank. Therefore, contribution of employee also part of salary. Think about business point of view. But that value should be transferred to the central bank. Therefore, second step, contribution of employee, part of salary. Therefore, salary account debit. Value equal 1,600. Second steps. And that value should be transferred to the central bank. There is a fund as EPF. Therefore, you have to prepare a separate ledger account as a EPF payable. EPF payable accounts. That value should be transferred to the central bank. Liability. Therefore, salary account debit, EPF payable account credit. This is a double entry contribution of employee. Part of salary, therefore salary account debit. That value deducted already from the employee salary. That value should be transferred to the central bank. Therefore, EPF payable account credit as a salary. Second steps, salary account debit as EPF payable. Think about steps. Very important adjustment. This is a legal requirement. Therefore, this is the second one. Second transaction. Salary account debit, EPF payable account credit. Think about steps. Second steps. First one, paid in cash net salary, cash account credit, salary account debit. And second one, contribution of employee for EPF, part of salary. Therefore, salary account debit, EPF payable account credit. EPF payable account also record values in 1000. That is the second step. There are 4 steps to be applied. Think about first one, net salary paid in cash. Net salary mean after deducting contribution of employee. This is value paid in cash as salary. Then contribution of employee also part of salary. That value deducted from salary and it should be transferred to the central bank. Therefore, that value also salary account debit, EPF payable account credit. And third steps, employer contribution for EPF. Employer mean business contribution. That value cannot be deducted from salary. It is not part of salary. It is another expense of the business. Business එකේ සල්ලි වලින් යවන්න ඕන. Value should be calculated based on salary of the employee. හැබැයි යවන්නේ business එකේ තියෙන සල්ලි වලින්. Cannot be deducted from salary. That is not part of salary, another expense. Therefore, you have to prepare separate ledger account as a EPF expense. And that value also should be transferred to the central bank. Therefore, EPF payable account also credit. This value notified for salary. It is not part of salary, another expense. Only employer give their contribution. Therefore, you have to prepare EPF expense accounts. Therefore, third steps, separate ledger account as a EPF expense. EPF expense. It is not part of salary, cannot be deducted from salary, another expense. Therefore, take values in 1000. Then expense. That value also should be transferred to the central bank. Contribution of employer, business contribution. Value equal 2400. Therefore, this value part of salary. This is not part of, this is not part of salary. This is another expense. Therefore, you have to prepare separate ledger account as a EPF expense. And this value also should be transferred to the central bank. Therefore, third steps, double entry 2400 EPF expense account debit, notified for salary, and EPF payable account credit. Think about double entry, contribution of employer, employment business. Therefore, name of other ledger account, EPF expense account debit as a EPF payable, EPF payable account credit as a EPF expense. This is step number 3. Therefore, step number 3, think about the steps. There are 4 steps to be applied. Net salary recorded already. Then contribution of employee and contribution of employer. Think about EPF contribution of employee. Salary account debit, EPF payable account credit. But contribution of employer, another expense. It is notified for salary. Reason that value cannot be deducted from salary. Another expense. EPF expense account debit. And that value also should be transferred to the central bank. Therefore, EPF payable account credit. Think about double entry. First one, net salary paid in cash. Cash account credit, salary account debit. And second one, contribution of employee for EPF. Salary account debit, EPF payable account credit. And contribution of employer for EPF. EPF expense account debit, EPF payable account credit. This is where you have record EPF. Now think about ETF. ETF, think about, only give their contribution of employer, like EPF contribution of employer cannot be deduct from salary. This one, if it has given contribution of employer, those value cannot be deduct from salary. Another expense like EPF contribution of employer, think about this one, double entry, EPF expense account debit, EPF payable account credit. Like that, ETF only employer give their contribution. Therefore, you have to prepare two ledger account for ETF, ETF expense accounts, and ETF payable accounts. It is not effect for EPF. Only employer give their contribution. Therefore, it is not effect for salary. Another two ledger accounts, ETF expense and ETF payable. Employer contribution for EPF, EPF expense account debit, EPF payable account credit. But ETF, employee trust fund, only employer give their contribution. Therefore, ETF expense account debit, ETF payable account credit. Therefore, two ledger account you have to prepare. Prepare two ledger account ETF, ETF expense account as well as ETF payable accounts. For ETF, there are two ledger account, ETF payable as well as ETF expense. Now think how it records. It is not effect for EPF. Separate fund maintained by the central bank. For ETF, only employer give their contribution. Employer, employee mean business. Therefore, that value cannot be deducted from salary. Another expense of the business. Therefore, ETF expense account debit, ETF payable account credit. 600 value, values in 1000. Therefore, ETF expense account debit 600 as ETF payable, ETF payable account credit 600 as ETF expense. Name of other ledger accounts. ETF expense account debit, ETF payable account credit. Therefore, this is the fourth steps. Think about, there are 4 steps to be applied. This is the fourth steps. Think how to record EPF and ETF in the business point of view. Definitely available in the paper. In accounting, we are going to provide information. All the business available employees. This is a legal requirement. Therefore, you have to know how to calculate, how to record in the ledger account, and how to disclose on the financial statement. Think about, this is the theory. EPF divided by 2 part, employee contribution as well as employer contribution. As well as ETF, only employer give their contribution. ETF, only employer give their contribution. And value should be calculated based on gross salary of the employees. Value should be calculated based on gross salary of the employees. It has given gross salary 20 million. Think business point of view. And it has given percentage also, employee contribution as well as employer contribution. This is the legal requirements. First one, EPF divided by 2 part. ETF only employer. Then think value how to calculate. Then when business going to pay salary to the employees, contribution of employees should be deducted from gross salary, balance part paid in cash. Therefore, this is called net salary. Think about the steps. Paid in cash, cash account credit, salary account debit, and contribution of employee, part of salary. This one salary account debit, EPF payable account credit. Step by heart. Then contribution of employer cannot be deducted from salary. It is not part of salary. Therefore, another expense. That value also should be transferred to the central bank. EPF expense account debit, EPF payable account credit. And ETF also same way. Only employer give their contribution. That is not part of salary. Another expense. Therefore, ETF expense account debit, ETF payable account credit. Now think how to disclose on the financial statement. Think about ledger accounts, salary. Therefore, this is a salary, total value. Think about debit side increase. All the expense accounts should be closed. Now think about salary expense and EPF expense as well as ETF expense account available. All the expense should be included under administration expense. Therefore, ETF expense accounts, EPF expense as well as salary. Those are the values should be included under administration expense. And EPF payable, think about EPF payable is a liability under current liability. And ETF payable liability under current liability. Therefore, now all the expense accounts should be closed. Close means difference value as a profit and loss. Think about salary accounts. All the expense accounts should be closed. Close means those values should be included in income statement. Salary account debit side increase. Debit side total amount equal to 20,000. And take that value other side. Cannot be carried down. Take other side 20,000. Then difference value as an income statement. That is the meaning of close. Not carry down. Therefore, here income statement. This value should be included under administration expense as a salary. This is value should be included income statement as a salary. Think about salary expense should be close. Close means difference value should be not carried down as an income statement. Like that, think about EPF expense accounts. All the expense accounts, EPF expense also same way. EPF expense debit side increase 2,400. Take that value credit side and difference value also 2,400. Now not carry down as income statement. Therefore, here income statement. This is a meaning of clause. This is value should be included under administration expense. Think about salary as well as EPF expense. Expense account balance not carry down. Close. Close mean as income statement. Think about closing entry. Closing entry should be recorded in the general journal. And ETF expense also available. Only expense account. ETF expense debit side increase. Take that value credit side and difference value equal 600 as income statement. Income statement. Therefore, this is a closing entry. This value should be included under administration expense. Think about there are three expenses available. EPF expense as well as ETF expense and salary. Those are the values should be included under administration expense. And now think about payable accounts. EPF payable liability. If it is liability, balance carry down. Those values should be included under current liability. Therefore, credit side increase, take total value credit side and difference value balance carry down. Therefore, credit side total amount equal 4,000. Take that value debit side and difference value also equal 4,000. Therefore, here balance carry down. Not income statement now. Balance carry down. Value equal 4,000. And that value balance brought forward credit side. Balance brought forward. Think how to disclose on the financial statement. Therefore, this is value should be included under current liability as a EPF payable. As EPF payable. Closing balance. Payable is a liability as well as ETF payable. Think about income and expense should be closed. Assets, liability and equity should be carried down. Therefore, ETF payable also liability balance carried down. Therefore, take credit side total amounts. Those are should be included under current liability as EPF payable. Therefore, credit side increase 600. Take that value debit side. Then difference value here balance carry down. Balance carry down from debit side to credit side. Therefore, difference value also equal 600. That value balance brought forward credit side. Balance brought forward. Only liability, assets and equity should be carried down. Income and expense should be closed. Therefore, this is the value should be included under current liability as a ETF payable. There are 5 marks available. 5 marks. Think about salary and administration expense and EPF expense, administration expense, ETF expense, administration expense. But EPF payable 4,000 and ETF payable under current liability. This is the way you have to record in the ledger accounts. Think about basic part. This is the thing you have to keep in mind. EPF divided by 2 part, employee contribution and employer contribution. But ETF only employer give their contribution. This is the normal percentage. This is a legal requirement. Meet වඩා වැඩි වෙන්න පුළුවන් percentage එක. Sometimes it is given 10% and 12%. And ETF sometimes it is given 5%. Then value should be calculated based on gross salary. Then think how it records. How much paid in cash as salary, think about. Gross salary equal to 20,000, but total salary is not paid in cash. Employee also give their contribution. Therefore, contribution of employee should be deducted from gross salary, balance part paid in cash. Only balance part. But then there are 6 ledger accounts. 6 ledger accounts you have to prepare. Think about step number 1. As salary paid in cash account credit, salary account debit, and contribution of employee, salary account debit, EPF payable account credit, and contribution of employer, EPF expense account debit, EPF payable account credit, ETF contribution of employer, ETF expense account debit, ETF payable account credit. This is the way you have to record normally. There are 4 steps should be applied. 6 ledger account you have to prepare. Value should be calculated based on gross salary. Then think how much paid in cash to the employee. This format also very important. And think about ledger accounts, salary accounts, close. There are 2 steps. Then think about cash accounts, EPF payable accounts, EPF expense accounts. Think about closing entry and balance carry down. Only income and expense can be closed. Assets, liability and equity should be carried down. Right, think about next one, question number 2. On කලින් ගානෙන් අල්ල ගන්න බැරි වුණා නම් මේකෙන් අල්ල ගන්න try කරන්න. Same information, only numbers change. First one, read carefully. Try to recognize employee contribution and employer contribution. Prepare the work-ins and prepare the ledger accounts. This one, think about how to disclose on the financial statement also. Question number first one. Think how to disclose on the financial statement. There are 3 expenses available. Income statement and administration expense. Think about how to disclose on the income statement. As expense and administration, there are 3 columns. All the expense should be included first column. This is income statement. Income statement. Try to recognize how to disclose for the year end. For the year end 31st March 2020. Under administration expense, and administration expense. Topic administration expense, and it as a salary. There are three expenses: an EPF expense as well as ETF expense. Think about all the expense should be included. All the expense relevant for employees should be included under administration. Think about as a salary, how much should be included. All the expense should be included first column. Then think about salary, value equal to 20,000, and EPF expense equal to 2,400. See the expense accounts, as well as ETF expense equal 600. Those are the values should be included in income statement. As a salary, salary account balance available 20,000. It has given salary account balance 20,000, and EPF expense account balance equal 2,400. ETF expense account balance equal 600. Under administration expense, first column, any organization. And think about statement of financial position also. EPF payable and ETF payable should be included under current liability. Statement of financial position, statement of financial position as at 31st March 20 under current liability. Under current liability as EPF payable. EPF payable as well as ETF payable. There are two liabilities available. Financial position, there are 5 marks. Think about under expense, there are 3 expenses and 2 liabilities. See the payable account balance. EPF payable account balance equal 4,000 under current liability, and ETF payable balance equal 600. Payable is a liability. Therefore, under current liability, ETF payable accounts, second column 4,000 as well as ETF payable will be equal 600. There are 5 marks available in the paper. All the business organization available employees, we are going to provide information. Therefore, you have to know how to provide information about employee salary. Think about theory, legal requirements. For EPF, both employee and employer give their contribution. And ETF, only employer give their contribution. This is the theory part. Then think how to calculate EPF and ETF. Then think how much paid in cash as a salary to the employees. Then think about steps. Net salary, then contribution of employee for EPF, contribution of employer for EPF, and ETF contribution of employer. Employer mean business. Those are another expense, not part of salary. But when business going to pay salary to the employee, contribution of employee can be deducted from salary. Balance part paid in cash. 4 steps should be applied, 6 ledger accounts. Right now, think about question number 2. On first එක තාම clear වුණේ නැත්නම් second එකකින් අල්ලගන්න try කරන්න. Second steps. Question number second one, think about same information, only numbers change. It has given EPF contribution of employer 12%. හදන්න පුළුවන් කට්ටිය හදන්න try කරන්න. තේරුම් නැත්නම් මාත් එක්ක හදාන යන්න. EPF contribution of employer 12%, employee 8% of the gross salary of the employees, and ETF contribution of employer 3% of the gross salary of the employees, Then given gross salary of the employees of the business 30 million. Think about business point of view. There are relevant ledger accounts. First one EPF divided by 2 part. First one EPF divided by 2 part. First one calculate values. EPF employee contribution and employer contribution. ETF only employer contribution. Gross salary is given. First one prepare the working like this. Then calculate value. Hadan try කරන්න import adjustment. First one prepare the workings. Gross salary is given. Therefore, value should be calculated based on gross salary. It is given 30,000. Therefore, 30,000 into 8%. Take values in 1000. Gross salary is given 30,000. Think about values in 1000. First one EPF divided by 2 part. Employee and employer contribution. Then ETF divided by ETF only employer. Therefore, here value equal 2,400. And employer contribution equal 12%. Based on gross salary 30,000 into 12%. Take the value. Value equal 3,600. ETF only employer give their contribution. Therefore, 30,000 into 3%. 30,000 into 3%. Take the value. Here value equal 900. First one, try to recognize how to calculate value. Then think about as a salary paid in cash, net salary. Think how to calculate net salary. Gross salary minus EPF contribution of employee. Answer is a net salary. Therefore, gross salary equal 30,000. Think values in 1000. From that value, deduct contribution of employee. Contribution of employee equal 2,400. Therefore, balance part, this is a net salary, 27,600. Net salary paid in cash. Therefore, net salary equal 27,600. This is a value paid in cash. It is called net salary. Only contribution of employee can be deducted. Contribution of employer cannot be deducted from salary. It is another expense of the business. ETF also same way. Only employee means workers. Contribution can be deducted from salary. When business going to pay salary to the employee, contribution of employee deducted from salary, balance part paid in cash. Then there are 6 ledger accounts. First one, cash account credit, salary account debit. Salary account debit, EPF payable account credit. And contribution of employer, EPF expense account debit, EPF payable account credit. ETF expense account debit, ETF payable account credit. Prepare the ledger accounts. cash accounts, salary accounts, EPF payable accounts, EPF expense accounts, as well as ETF expense and ETF payable accounts. There are 6 ledger accounts. 4 steps should be applied. Definitely available in the paper. All the business organization available employees. Our duty in accounting, we are going to provide information. This is a legal requirement. You have to know how to provide information about employees' salary and EPF and ETF. Try to recognize how to calculate net salary. Think about EPF, Employee Provide Fund. Both fund available in the central bank, maintained by the central bank. Each and every month, based on salary of the employee, should be calculated and transferred to the central bank. You have to know how to record in the business point of view. Therefore, there are 6 ledger accounts. Prepare the ledger accounts and disclose on the financial statement also salary accounts, EPF expense and EPF payable accounts. First one, draw the ledger accounts. Salary accounts, cash accounts, EPF expense and EPF payable accounts, as well as ETF expense and ETF payable accounts. Think about steps also. There are 6 ledger accounts. You have to prepare. There are 6 ledger accounts. Salary, cash. Then EPF payable as well as EPF expense. ETF payable and ETF expense. Think about steps. There are 4 steps to be applied. First one, prepare the ledger account, salary accounts, cash accounts, EPF expense and EPF payable, as well as ETF expense and ETF payable. There are 4 steps to be applied. Think about steps. First one, contribution of employee should be deducted from gross salary. As a salary should be paid, this value. Paid in cash. Cash account credit, salary account debit. Step number 1. As a salary paid in cash. Cash account credit, salary account debit 27,600. Therefore, salary account debit 27,600 as a cash, and cash account credit. Think about double entry 27,600. This is step number 1. Step number 1. Think about steps also. Very important. Cash account credit, salary account debit. Then second steps, contribution of employee, EPF contribution of employee, also part of salary. Therefore, this value should be transferred to the central bank also. That is a part of salary. Therefore, this value, salary account debit, EPF payable account credit. Contribution of employee also part of salary. This is a value paid in cash as salary, and this value should be transferred to the central bank. This is a contribution of employee, part of salary. Therefore, 2,400 salary account debit, EPF payable account credit. Then records salary account debit 2,400 as EPF payable, EPF payable. This is step number 2. Salary account debit, EPF payable account credit, and EPF payable account should be credit as a salary. EPF payable account credit 2,400. Description name of other ledger account as a salary. That is step number 2. Think about steps. Net salary paid in cash, cash account credit, salary account debit. But contribution of employee, salary account debit, EPF payable account credit. Part of salary contribution of employee, but that value should be transferred to the central bank, EPF payable accounts credit. Then third steps, contribution of employer for EPF. This is not part of salary. This value cannot be deducted from salary, another expense, but that value also should be transferred to the central bank. Central bank එකට දෙන්නගෙම contribution එක යවන්න ඕන. Therefore, this is employer contribution. ඒක salary එකෙන් deduct කරන්න බෑ. That is another expense. Therefore, this fund, EPF expense account debit, EPF payable account credit. Another expense, not part of salary. That value cannot be deduct from salary. Those are the things keep in mind. Expense. Therefore, EPF expense account debit, EPF payable account credit. Record it. EPF expense account debit 3,600 as EPF payable, name of other ledger account. Step number 3. And EPF payable account credit. EPF expense account debit, EPF payable account credit. Therefore, EPF payable account credit as EPF expense. Step number 3. Credit value equal 3,600. Think about salary account debit, EPF payable account credit, and EPF expense account debit, EPF payable account credit. Both value EPF payable account credit, but contribution of employee, salary account debit. Contribution of employer, EPF expense account debit. EPF, both values should be transferred to the central bank. EPF payable account credit, both value. But contribution of employee part of salary, salary account debit, and contribution of employer, another expense. Therefore, EPF expense account debit. Now think about ETF part. ETF only employer give their contribution, cannot be deduct from salary. It is not part of salary. Therefore, another expense. ETF contribution of employer also another expense, not part of salary. It is not effect for salary accounts. There are two ledger account, ETF expense account debit, ETF payable account credit. Therefore, there are two ledger accounts, values equal 900, ETF expense as well as ETF payable. Prepare the ledger accounts. ETF expense account debit 900 as ETF payable, name of other ledger accounts, and ETF payable account credit 900 as ETF expense. ETF expense account debit, ETF payable account credit. Only contribution of employer, another expense. This is step number 4. There are 4 steps to be applied when recording in the ledger accounts. Now think about there are 3 expenses, 2 liabilities. There are 3 expenses, 2 liabilities. All the expense should be included in income statement. Therefore, salary expense should be closed. And EPF expense close. ETF expense close. Close means difference value as income statement. But ETF payable as well as EPF payable, those are liability. Therefore, balance should be carried out. Right now, close salary accounts. Debit side increase. Therefore, take total amount of debit side equal 30,000. Take that value other side. Difference value not carried down as an income statement. That is the meaning of close. Income statement. Therefore, this is the value should be included under administration expense as a expense. And EPF expense also same way. Salary, this is the value should be included in income statement as salary under administration expense. Close. Take increase side, take other side, difference value as a income statement. And ETF expense also same way. EPF expense, debit side increase, all the expense accounts should be closed. Take other side, difference value as income statement. This is value should be included under administration expense and income statement under administration expense. This value should be included under administration expense as a EPF expense. As well as ETF expense also same way, also should be included under administration expense. Debit side increase, take the credit side, the difference value income statement. There are three expenses relevant for employees under administration expense: salary, EPF expense, and ETF expense. And think about EPF payable, ETF payable, EPF payable as well as ETF payable. Those are liability. Balance should be carried down. Therefore, EPF payable accounts, credit side increase. Those value not close should be carried down. Therefore, credit side total amount equals 6,000. Take that value debit side and difference value in this side balance carried down. Therefore, difference value also equals 6,000 and balance brought forward credit side 6,000. Therefore, this is value should be included under current liability. Under current liability. This value should be included under current liability. And ETF payable also same way. Balance carry down. That is a liability. Credit side increase. Take that value debit side. Difference value not income statement as balance carry down. Assets, liability, and equity should be carried down. And that value balance brought forward credit side. Therefore, balance brought forward also 900. This value also should be included under current liability. There are two liabilities and three expenses. 5 marks available. Any organization, sometimes they ask with sole proprietorships, partnerships, company, any organization, they ask this kind of adjustment. Think how to record in the ledger accounts. Think about the steps. Then think how to disclose on the financial statement also. Income statement under administration expense as a salary, as a EPF expense, as a ETF expense. There are three expenses. As well as EPF payable and ETF payable under current liability. Right. Prepare the income statement roughly. You have to know how to disclose on the financial statement. Think how to calculate, how to records, and how to disclose on the financial statement. Therefore, income statement under administration expense as well as financial position under current liability. Think about salary, EPF expense and ETF expense as well as financial position under current liability as EPF payable and ETF payable. This is the way you have to disclose. Think about salary account balance. Therefore, salary expense equal 30,000. EPF expense equal 3,600 and ETF expense equal 900. Right, those should be recorded income statement. Therefore, as a salary 30,000, as EPF expense 3,600 and as ETF expense 900. And EPF payable. Think about payable account balance. EPF payable account balance equal 6,000 as well as ETF payable account balance equal 900. Those are liability should be included under current liability. Therefore, as EPF payable 6,000, ETF payable 900. There are 5 marks available. We are going to provide information. All the business organization employees available. This is a legal requirement. You have to know how to calculate, and how to record in the ledger accounts. Think about EPF divided by 2 part, ETF only employer. Then think how to calculate values, and think how much paid in cash to the employee as a salary. As a salary should be paid after deducting contribution of employee. Then think about there are 4 steps should be applied. Percentage, this is a normal percentage, legal requirement. Sometimes it is given 10%, 15%, and 5%. මේ percentage එක අඩු කරන්න බෑ, වැඩි කරන්න පුළුවන්. Right, next one. මේක තේරුණා නම් question number 3 හදන්න බලන්න. practice එකෙන් තමයි realize වෙන්නේ. Question number third one, think about same information, but percentage is changed. Read carefully. EPF divided by 2 part, ETF only employer. Try to calculate, try to record in the ledger accounts, then disclose on the financial statement. Read and get idea. Try to answer. Read carefully. First one, recognize separately EPF and ETF. Then take the percentage also. හදන්න පටන් ගන්න. First one, take the percentage. It has given contribution of employer 15%. Employee is given 15%. And contribution of employee for EPF it has given 10%. And ETF it has given contribution of employer 5%. First one, calculate values. After that, think about steps. Then record in the ledger account also. Based on gross salary, value should be calculated. Based on gross salary, it has given gross salary 40 million. Take values in 1000. Therefore, 40 million into 10%. 40 million into 10% equal 4,000. Now think about percentage change. Next one, 40 million into 15%. Record values in 1000. Therefore, here value equal 6,000. ETF only employer give their contribution. Gross salary equal 40 million. Based on that value 5%. Therefore, here value equal to 1,000, 6,000 and 4,000. Then gross salary equal 40,000. Think when business going to pay salary to the employee. It has given 40,000 gross salary, but contribution of employee it has given 4,000. That value should be deducted from gross salary. Balance part paid in cash. Therefore, as a salary paid in cash after deducting contribution of employee. Now think about steps. After deducting contribution of employee, first one, think about percentage. It has given gross salary in the example. Gross salary equal 40,000. Based on that value should be calculate value. Then think about contribution of employee, contribution of employer. Then think how much paid in cash as a salary. Think about how much paid in cash as a salary. After deducting contribution of employee, think about percentage change now. Legal requirement. It has given 8%, 12% and 3%. ඊට වඩා අඩු කරන්න බෑ, වැඩි කරන්න පුළුවන්. Normally it has given 10%, 15%, 5%. Now think about the steps. There are 6 ledger accounts should be applied. 6 ledger accounts. Net salary paid in cash, cash account credit, salary account debit. And contribution of employee, salary account debit, EPF payable account credit. Contribution of employer, EPF expense account debit, EPF payable account credit. As well as ETF contribution of employer, ETF expense account debit, ETF payable account credit. Right, prepare the ledger accounts. There are 6 ledger accounts. Try to recognize these steps. Right, there are 6 ledger accounts. And think how to disclose on the financial statement also. Right, salary accounts. And cash accounts. EPF expense and EPF payable accounts. Prepare the ledger account. There are 6 ledger accounts. As well as ETF expense and ETF payable. ETF expense as well as ETF payable accounts. There are 6 ledger accounts. Now think about the steps. First one, net salary should be recorded. This is a value paid in cash as a salary after deducting contribution of employee. Salary 40,000 උනාට සල්ලි ගෙවනකොට ගෙවන්නේ employee central bank එකට යවන්න ඕන ගාන අඩු කළාට පස්සේ එන value එක. After deducting contribution of employee, balance part paid in cash. It is called net salary. Therefore, net salary equal 36,000. That is a value paid in cash as a salary. Think about cash account credit, salary account debit. Therefore, salary account debit 36,000 as a cash, name of other ledger account. And cash account credit as a salary. Cash account credit 36,000 as a salary. This is the step number 1. Net salary paid in cash. Very important steps. Step by heart. As a salary paid in cash after deducting contribution of employee. Cash account credit, salary account debit. Think about double entry. After that contribution of employee that it has deducted already from salary, that value should be transferred to the central bank. In the business point of view, contribution of employee also part of salary. Contribution of employee also part of salary, 4,000. Therefore, salary account debit and EPF payable account credit. That value should be transferred to the central bank. Therefore, EPF payable account credit, name of other ledger account as a salary, and salary account debit as a EPF payable. That is the second steps. Contribution of employee deducted from salary. That is a part of salary. And that value should be transferred to the central bank. Therefore, salary account debit, EPF payable account credit. Step by heart. Then 30 steps, contribution of employer 6,000, that is not part of salary, cannot be deduct from salary, it is another expense. මේ business එකේ තියෙන සල්ලි වලින් යවන්න ඕන. employee ගේ සල්ලි එකකින් අඩු කරන්න බෑ. This is the legal requirements. Therefore, that is another expense. Therefore, this value EPF expense account debit, EPF payable account credit. Therefore, 6,000 EPF expense account debit, EPF payable account credit. Another expense as EPF expense, value equal 6,000, EPF expense account debit as EPF payable, name of other ledger accounts, and EPF payable account credit as EPF expense, name of other ledger accounts. Value equal 6,000. EPF expense account debit, EPF payable account credit. But contribution of employee, salary account debit, EPF payable account credit. Salary account debit, EPF payable account credit. But employer, EPF expense account debit, EPF payable account credit. 30 steps. Contribution of employer. Another expense, both value EPF payable account credit. Step by heart. Then think about ETF also. ETF only employer give their contribution. ETF. Therefore, it has given 2,000. Another expense, not part of salary. ETF expense account debit, ETF payable account credit. Therefore, 2,000. Fourth steps, ETF expense account debit 2,000, ETF payable account credit 2,000. Therefore, here name of other ledger accounts and ETF expense account debit as ETF payable. This is fourth steps. There are 4 steps should be applied normally when recording in the ledger accounts. This is adjustment legal requirements. All the business available employees. Therefore, you have to know how to record EPF and ETF. Normally, 4 steps should be applied. Try to recognize how to calculate value. Then all the expense accounts should be closed. Salary is expense, close. Close means difference value as income statement. Therefore, debit side increase, take that value credit side. Difference value not carry down as income statement. Difference value as income statement. Therefore, this is value should be included under administration expense. As well as EPF expense, 6,000 debit side increase and take that value credit side. Difference value also 6,000, close as income statement. This value also should be included under administration expense. As well as ETF expense also same way. There are 3 expenses. All the expense accounts should be closed. Close mean difference value as income statement. As income statement. Therefore, there are 3 expenses. Those values should be included under administration expense. Then think about payable accounts. EPF payable liability balance carry down. As well as ETF payable also same way. EPF payable credit side total amount increase 10,000. Take that value debit side. Now difference value as balance carry down. Therefore, difference value as balance carry down. And balance brought forward credit side. Therefore, this is value should be included financial position under current liability. Liability. Those are cannot be included income statement. Payable is a liability. and current liability. And ETF payable also same way. ETF payable credit side 2000, take that value debit side and difference value as a balance carry down. Assets, liability and equity balance carry down, value equal 2000. And that value balance brought forward credit side, that is a value should be included under current liability. There are 5 marks available. Adjustment. Then think how to disclose on the financial statement. Think about salary 40,000 and administration, and ETF expense, EPF expense 6,000 administration, ETF expense 2,000 administration. EPF payable under current liability, ETF payable also under current liability. Disclose on the financial statement. Think about income statement as well as statement of financial position. Income statement under administration expense as a salary. Think about EPF expense, ETF expense, as well as under current liability, EPF payable and ETF payable. Expense should be included first column. Salary account balance equal 40,000. EPF expense account balance equal 6,000. EPF expense account balance and ETF expense account balance equal 2,000. As well as EPF payable second column 10,000. ETF payable 2,000. There are 5 marks available in the paper. Try to recognize how to calculate and how to record in the ledger accounts. Then think how to disclose on the financial statement. Think about steps and think about double entries also. Cash account credit, salary account debit, salary account debit, EPF payable account credit, EPF expense account debit, EPF payable account credit, ETF expense account debit, ETF payable account credit. This is the way you have to record normally. But now think about question of fourth one. On a paper in a video. This is the way you have to record normally. But think about question of fourth one. Question of fourth one, think about. Very important. Normally it has given in the paper like that. This is the way it has given in the paper. Now think about question number 4. It has given trial balance. On a trial balance එකේ ගානේ දෙන විදිය. If it has given trial balance, part of adjustment has been recorded. Think about trial balance should be prepared in the general ledger. On a paper එකේ එන්නේ මේ විදියට. කලින් මම discuss කළේ record කරන විදිය හරියට. But in the paper it has given part of adjustment has been recorded. Therefore balance part should be done. Very very important. On the exam paper එකේ එන විදිය. ගාන භාගයට record කළා තියෙන්නේ. Balance part should be done. Therefore you have to know how to calculate and how to record. Very important. Read carefully. Think about normally 4 steps should be applied. If it has given trial balance, part of adjustment has been recorded. That is the meaning. There were double entry. එකනේ step number 1, 2, 3, 4 අන්න ඒ වගේ කොටසක් කරලා තියෙන මේකේ දැන්. Salary account balance available trial balance. It has given salary account balance. Salary balance available 36,800. Trial balance is given as at 31st March 20. Try to recognize which salary. Sometime it has given gross salary. Sometime it has given net salary. We have to decide based on given information. Right, think about percentage. Read carefully, very important. හොඳ රහගන්න මේක. මෙන්න මෙතන gross salary ද දීලා තියෙන්නේ net salary ද කියලා අපි හොයාගන්න ඕන. It has not given clearly. Sometime it has given gross salary, sometime it has given net salary. Think how to recognize. Right, it has given EPF contribution of employer 12%, employee 8%, and of the gross salary of the employees. ETF contribution of employer 3% of the gross salary of the employee. That part normal. But think about this one, very important. මෙතන යට ටික පොඩ්ඩක් බලන්න හොඳට. This part very important. Salary account balance available. Part of adjustment relevant for salary has been recorded. Here is given both contribution of employee and employer has not been recorded for entire year. EPF and ETF contribution of employer and employee has not been recorded. Both. But salary account balance available. Now think about question number third one. See the salary accounts. This one very important. Think about. Say carefully the salary accounts. Think about cash account credit, salary account debit, and salary account debit, EPF payable account credit. There are two adjustment effect for salary. Think about if contribution of employee has not been recorded. මෙයා record කරලා නැත්නම් salary account එකේ තියෙන්නේ මොකක්ද කියලා හිතන්නකෝ. Contribution of employee. It has given question number fourth one. Both contribution of employee and employer has not been recorded. But salary account balance available. Think about contribution of employee, this value not recorded. මේක record කරේ නැහැ කියලා හිතන්නකෝ බලන්න. එහෙනම් salary account එකේ තියෙන මොනවද? This is a net salary. That is the way you have to decide. It means step number 1 recorded already. Think about question number fourth one. Trial balance, it has given salary account balance. What's the meaning? Cash account credit, salary account debited, recorded already. But contribution of employee not recorded. Contribution of employee not recorded, but salary account balance available. If there is a balance, that is a net salary. That is a way we have to decide. It has given both contribution of employee and employer has not been recorded. එහෙනම් මෙයා record කරලා නැහැ. But salary account balance available. එහෙනම් මෙයා record කරලා නැත්නම් balance එකක් තියෙනවා නම් එහෙනම් step number 1 recorded. It means cash account credit, salary account debited. Now think about question number fourth one, very important. Think about this part. Salary account balance available. Cash account credit, salary account debited already. But here it has given both contribution of employer and employee has not been recorded. Think about contribution of employee also effect for salary accounts. Salary account debit, EPF payable account credit. අන්න ඒක record කරලා නැහැ. But salary account balance available. What is the meaning? Net salary recorded. Cash account credit, salary account debit. Part of adjustment has been recorded. Step number 1 recorded. Very important this part. Both contribution of employer and employee. Think about employee contribution, effect for salary. It has not recorded. But salary account balance available. If contribution of employee has not been recorded, but salary account balance available, therefore this is the net salary. That is the way you have to decide. If contribution of employee has not been recorded, this is the way you have to decide. If EPF contribution of employee has not been recorded, if EPF contribution of employee has not been recorded, think about contribution of employee. Here it is given both contribution of employer and employee has not been recorded. You have to see the contribution of employee. If EPF contribution of employee has not been recorded, in this situation, Net salary. Net salary is available in the trial balance. Very important. Trial balance, it has given salary. Therefore, think about which salary available in the trial balance. It is depend on EPF contribution of employee has not been recorded. Both not recorded. We have to consider only employee contribution. Employee contribution effect for salary. It has not recorded, but salary account balance available. Therefore, this is a net salary. But value should be calculated based on gross salary. Now think calculation part. Very important. මේ ගාන හොඳට තේරුම් ගන්න try කරන්න. Right. EPF divided by two parts. EPF divided by two part. And ETF only employer contribution. Trial balance available net salary. Think about percentage also. Value should be calculated based on gross salary. First one, separate contribution of employee and employer. Very important, this one. At first one, think about percentage. It has given employee 8%. Employer, it has given 12%. ETF, it has given 3%. And trial balance available net salary. How to decide? Contribution of employee has not been recorded. Both not recorded. We have to consider contribution of employee. If it has not recorded, trial balance available net salary. What is the meaning? Cash account, credit salary account debited already. Therefore, now no need to prepare cash account. Part of adjustment has been recorded. There are two adjustment effect for salary, but contribution of employee not recorded, but salary account balance available. What is the meaning? This is the net salary paid in cash. There were double entry. Cash account credit, salary account debited. This is a net salary. Now that value should be recorded here. Very important. Think about gross salary minus EPF contribution of employee equal net salary. Therefore, net salary equal 36,400. It has available trial balance. So 36,800. It has given trial balance. That is a net salary. Cannot be included here. Right now, gross salary should be calculated from the beginning. Think about how to calculate net salary. Very important here. Think about net salary equal from gross salary. Deduct EPF contribution of employee. Think about EPF contribution of employee equal. It has given 8%. It means if gross salary, very important. If gross salary 100. If gross salary 100. Contribution of employee equal 8%. If gross salary 100, contribution of employee 8. Then think about net salary. If gross salary 100, deducted 8%. Therefore, net salary equal 92. Very important. Think what? When calculating net salary, deducted contribution of employee, it is equal 8%. If gross salary 100, contribution of employee equal 8. Therefore, net salary equal 92. Therefore, now can be calculated gross salary. Gross salary is not given, but value should be calculated based on gross salary. Net salary is given. How to calculate net salary? Contribution of employee should be deducted from gross salary. Contribution of employee equal 8%. If gross salary 100, then think about net salary. Therefore, this is the way you have to calculate gross salary. Very important. Reason, value should be calculated based on gross salary. But gross salary is not given. It has given net salary. Therefore, 36,800. It is equal now 92. But we have to calculate gross salary. Therefore, this value divide by this one into 100. That is a gross salary. Therefore, 36,800 divided by 92 into 100. This is the way you have to calculate gross salary. Value should be calculated based on gross salary, but trial balance it has given net salary. Then how to calculate gross salary? Think about. If gross salary 100, deducted contribution of employee 8%, therefore net salary equal 92. Therefore net salary 92, it is equal 36,800. Therefore 36,800 divided by 92 into 100, that is a gross salary. Right, first one you have to calculate gross salary, very important. It has not given clearly. Therefore 36,800 divided by 92 into 100. Therefore here gross salary equal 40,000. Very, very important. Trial balance it has given net salary. How to recognize? It has given salary account balance, trial balance. Contribution of employee not recorded. It means cash account credit, salary account debited. This is a value paid in cash. How to calculate net salary? After deducting contribution of employee. If gross salary 100, contribution of employee equal 8%, therefore net salary equal 92. Then 36,800 divided by 92 into 100, gross salary can be calculated. Now value can be calculated based on gross salary. Very important. Now 40,000 into 8%. Think about based on gross salary value should be calculated. Try to recognize how to calculate 40,000. Given net salary, but value should be calculated based on their gross salary. Therefore, gross salary how to calculate? Net salary 36,800 divided by 92 into 100. Sometime it has given here 10%. If it has given 10%, 100 minus 10 equal 90. If it has given 10%, this one divided by 90 into 100. Try to recognize difference. Then gross salary already calculated. Based on gross salary, value should be calculated. Therefore, 40,000, that is a gross salary into 12%. As well as EPF, 40,000 into 3%. First one, try to recognize how to calculate gross salary. Then based on gross salary, value should be calculated. Then take the answer here, 3,200, 4,800, and here 1,200. Then gross salary we know now, it is equal 40,000. That value should be included here, 40,000. And contribution of employee also calculated. That value equal 3,200. Therefore, think about net salary. Therefore, this is the net salary. Now, normal steps. Step number 1 already recorded. Trial balance available salary. Cash account credit, salary account debited already. It has given trial balance, salary account balance. It means there were double entry. Part of adjustment has been recorded. Therefore, step number 1 recorded already. Therefore, cash account credit, salary account debited. Now, when we are going to record in the ledger account, no need to prepare cash accounts. It has recorded trial balance. It has given balance also. Therefore, now you have to prepare only 5 ledger accounts. Only 3 steps should be applied. Step number 1 recorded already. Cash account credit, salary account debited. Then prepare the ledger accounts. Think about salary account balance available. Very important. That you have to prepare 5 ledger accounts. No need to prepare cash accounts. Step number 1 recorded already. Cash account no need to prepare. It has recorded already. Therefore, salary accounts no need to prepare cash accounts. It has already recorded. There are 5 ledger accounts. Salary accounts, EPF payable, EPF expense, and ETF expense as well as ETF payable. ETF expense and ETF payable. Think what, there are 5 ledger accounts now. No need to prepare cash accounts. Reason, it has recorded already. Trial balance available, salary account balance. Now think how it records. Normally 4 steps should be applied. Step number 1 recorded already. Trial balance available, salary account balance also. Salary account balance available, trial balance. Right, now think about how to record in the ledger accounts. First one, trial balance available, salary account balance. That value should be included as a balance brought forward in the salary accounts. Now cannot be written as a cash. This value should be included in the salary account as a balance brought forward. 36,800. Step number 1 recorded already. It has available in the trial balance. 36,800. That value salary accounts. 36,800. If it has given balance in the trial balance, it should be included as a balance brought forward. This is the value paid in cash as a salary. It has recorded already. Cash account credit, salary account debited. It has given trial balance. Therefore, now here cannot be written as a cash. Reason, it is available in the trial balance. Therefore, if information included in the trial balance, those values should be recorded as a balance brought forward. Adjustment. Step number 1 recorded already. Normally 4 steps should be applied. Then balance part should be done. This value recorded already. Cash account credit, salary account debited. Then step number 2, 3, 4 should be done. First one recorded already. Cash account credit, salary account debited. It has available trial balance. Therefore, that value now in the salary account as a balance brought forward, not as a cash. It has already recorded. They were double linked. Therefore, now step number 2, 3, 4 should be done. Step number 1 recorded. It has available trial balance. That value as a balance brought forward. Therefore, now no need to record step number 1. It has recorded. Balance part should be done. Therefore, step number 2. Contribution of employee, part of salary. Therefore, this value, salary account debit, EPF payable account credit, 3,200. Step number 1, no need to record now. It has available in the trial balance, recorded already. From step number 2 should be complete. Therefore, this value, contribution of employee, salary account debit, EPF payable account credit. Record it, 3,200. Salary account debit as EPF payable and EPF payable account credit as a salary. EPF payable account credit as a salary. Name of other ledger accounts. This is step number 2. Now step number 1, no need to record. It has recorded already. Available trial balance. Therefore, this is step number 2. Salary account debit, EPF payable account credit. Step number 1, no need to record now. It has recorded. Available trial balance. Salary account debit, EPF payable account credit. That is a contribution of employee. And third steps, contribution of employer for EPF, 4,800. EPF expense account debit, EPF payable account credit. Therefore, this is another expense, not part of salary. Therefore, contribution of employer notified for salary account. EPF expense account debit, EPF payable account credit. Therefore, contribution of employer 4,800, EPF expense account debit, and EPF payable account credit. Therefore, name of other accounts, EPF expense account debit as EPF payable, EPF payable account credit as a EPF expense. Therefore, this is the step number 3. Balance part normal way. Step number 1 recorded already. Therefore, second one, third one, fourth one should be done. Contribution of employee, salary account debit, EPF payable account credit. Contribution of employer, EPF expense account debit, EPF payable account credit. Then ETF, contribution of employer. ETF, it has given contribution of employer 1,200. Another expense, not part of salary. ETF expense account debit, ETF payable account credit. Therefore, value equal 1,200. ETF expense account debit as ETF payable and ETF payable account credit 1,200 as ETF expense. Think about step number 1 recorded already. Therefore, step number 2, 3, 4 should be done. This is the fourth steps. Contribution of employer for ETF. Another expense, not part of salary. Think about double rent. No need to prepare cash account now. It has already recorded. Then salary account expense should be closed. And EPF expense should be closed. ETF expense should be closed. There are 3 expenses and 2 liabilities. Expense account should be closed. Think about salary accounts. Therefore, debit side increase 40,000. Take that value credit side. Therefore, difference value as income statement. Therefore, income statement. This is value should be included under administration expense as a salary. And think about EPF expense also same way. EPF expense, debit side increase. Take that value credit side. Difference value as an income statement. Close. All the expense should be closed as an income statement under administration expense in the income statement. As well as ETF expense also same way. All the expense accounts should be closed. Close means difference value as income statement. Those values should be included under administration expense. And there are 2 liabilities available. All the liabilities balance carry down. Therefore, EPF payable under current liability. Credit side total amount equal 8,000. Take that value debit side. Difference value balance carry down from debit side to credit side. And credit side balance brought forward. Therefore, this is value should be included financial position under current liability. EPF payable is a liability. There are 5 marks. No need to prepare cash accounts. And ETF payable also same way. Credit side increase. Take that value debit side. Then difference value as a balance carry down. As a balance carry down, 1,200. This is a value should be included under current liability as a EPF payable, ETF payable. 5 marks available. No need to prepare cash account in this example. Trial balance also given salary account balance. Part of adjustment has been recorded. You have to decide this salary, net salary or gross salary. How to decide? Effect for salary account, contribution of employee for EPF. It is depend on EPF contribution of employee. If this is the theory, very important this part. If EPF contribution of employee has not been recorded, in this situation, net salary is available in the trial balance. It has given here both contribution of employer and employee has not been recorded. We have to consider only contribution of employee. Effect for salary account contribution of employee not recorded. Therefore, recorded only paid in cash net salary. If contribution of employee has not been recorded, trial balance available net salary. It has not given clearly. We have to decide. Try to recognize net salary or gross salary available in the trial balance. How to decide it? It is depend on EPF contribution of employee. If it for salary accounts. If it has not recorded net salary. If contribution of employee has been recorded gross salary. That is the way you have to decide. If it has given net salary from the beginning, gross salary should be calculated. This is the way you have to calculate gross salary. Given net salary, if gross salary 100, contribution of employee equal 8%, therefore net salary equal 92. If it has given 10% here, therefore here deduct 10, therefore this one became a 90. Then net salary we know that value divided by 92 into 100, gross salary can be calculated. If it has given 10%, this value divided by 90 into 100. That is the difference. Then based on gross salary, value should be calculated. Trial balance include value should be recorded as a balance brought forward. Step number 1 recorded, balance part should be done. Normally 4 steps should be done. Then think how to disclose on the financial statement. There are 5 marks available, 3 expenses, 2 liabilities. Therefore, income statement as well as financial position, you have to know how to disclose also. That income statement under administration expense as well as financial position under current liability. Think how to disclose on the financial statement also. Prepare the income statement under administration as well as statement of financial position under current liability. Think how much should be disclosed. This is the way you have to disclose on the financial statement, whether it is sole proprietorships, partnerships, company, any organization. Therefore, under administration expense, there are 3 expenses: salary, EPF expense, and ETF expense. Therefore, salary account balance, think about salary account balance equal 40,000, EPF expense account balance equal 4,800, as well as ETF expense account balance equal 1,200. Therefore, 40,000, 4,800, and 1,200 under administration expense. First column as salary 40,000, as EPF expense 4,800, and as ETF expense 1,200. All the expense should be included first column. See the expense account balance. Then payable account under current liability. Think what EPF payable value equal 8,000 and ETF payable value equal 1,200. Therefore, payable account balance, EPF payable second column 8,000, ETF payable 1,200. 5 marks available. 5 marks. Part of adjustment has been recorded. Part of adjustment has been recorded. Try to recognize how to calculate and how to record. It has given trial balances also. 5 ledger accounts. Now no need to prepare cash accounts. Try to recognize how to calculate gross salary. It has given net salary. තව එකක් අදමු අපි question number 5. This one very important. අල්ලගන්න try කරන්න කොහොම හරි අමාරුයි පාඩම. Adjustment Right, think about question number fourth one. Question number 5. Trial balance has given salary. Part of adjustment has been recorded. Now percentage change. That is the difference. Trial balance it has given salary account balance. Try to recognize net salary or gross salary. Percentage, think about this one, very important. Both contribution of employer and employee has not been recorded. Think about contribution of employee has not been recorded. If contribution of employee has not been recorded as a salary, trial balance available, paid in cash value, that is a net salary. It means cash account credit, salary account debited. Therefore, this is the net salary. How to decide contribution of employee has not been recorded? Only contribution of employee, think about. Effect for salary account contribution of employee, it has not recorded. Therefore, trial balance available, net salary. Percentage, think about. First one, prepare the work in like that. EPF divided by 2 part and employee contribution as well as employer contribution. Think about percentage also. Now it has given 15% employer contribution for EPF, employer 15% and employee 10%, ETF employer 5%. Think about percentage. Trial balance available net salary. How to decide? If it has given trial balance as a salary, there were double entry. Cash account credit, salary account debit. There are two adjustment effect for salary. Contribution of employee also effect for salary. Salary account debit, EPF payable account credit. But here it is given both contribution of employer and employee has not been recorded. It means contribution of employee, salary account debit, EPF payable account credit, like that not recorded. Contribution of employee not recorded, but salary account balance available, that is a net salary. Then think how to calculate net salary. We have to calculate gross salary. Value should be calculated based on gross salary. Then think about how to calculate net salary. Think about this is the theory. Gross salary minus contribution of employee equal net salary. In this example, contribution of employee is given 10%. Therefore, this one not 8, 10. Therefore, now think about gross salary. Net salary, think about. If gross salary 100, deducted employee contribution 10%. Therefore, now net salary equal 90. Trial balance, it has given net salary. This is a net salary in this example. Therefore, net salary equal 36,000. Think how to calculate gross salary. Value should be calculated based on gross salary. When we are going to calculate net salary, from gross salary deducted contribution of employee 10%. If gross salary 100, contribution of employee equal 10%. Therefore, net salary equal 90. Trial balance, it has given salary. Part of adjustment has been recorded. Cash account credit, salary account debited. But contribution of employee also effect for salary, it has not recorded yet. It means salary account debit, EPF payable account credit, like that not recorded. Salary account balance available. There are two adjustment effect for salary. Part of adjustment has been recorded, but contribution of employee has not been recorded. Therefore, trial balance available, net salary. But value should be calculated based on gross salary. Then think how to calculate gross salary. 36,000 divided by 90 into 100. Now divide by 90. If it has given 8%, divide by 92. If it has given 10%, divide by 90. Therefore, gross salary equal this one divide by 90 into 100, same 40,000. Think about percentage. Value should be calculated based on gross salary. Trial balance it has given net salary. How to decide? EPF contribution of employee has not been recorded. But trial balance it has given salary account balance. There were double entry. Cash account credit, salary account debited. But salary account debit, EPF payable account credit, like that not recorded. Net salary is given, but value should be calculated based on gross salary. It is equal 40,000. Then based on 40,000, calculate 10%. That is a contribution of employee. Therefore, value equal 4,000. That is the value should be deduct here. Contribution of employee. And employer also same way. 40,000 gross salary into 15%. Therefore, here value equal 6,000. And ETF also same way. Based on gross salary value should be calculated. Percentage is given 5%. Therefore, value equal 2,000. There are 5 ledger accounts should be prepared. No need to prepare cash accounts. Cash account credit, salary account debited already, recorded. Then prepare the ledger accounts. Salary accounts, EPF expense, EPF payable, and ETF expense and ETF payable. There are 5 ledger accounts you have to prepare. Then think how to disclose on the finance listing also. Salary accounts, EPF payable accounts, no need to prepare cash accounts, and EPF expense accounts, ETF expense and ETF payable accounts, and income statement and administration expense, as well as statement of financial position and current liability. You have to know how to disclose. Trial balance, it has given balances. Therefore, first one, take the balance available in the trial balance as a balance brought forward. Net salary recorded already. Those are the ledger account, no need to prepare cash accounts. Normally 4 steps should be applied, but step number 1 recorded already. Trial balance, it has given 36,000. Cash account credit, salary account debited. Therefore, this value should be recorded as a balance brought forward in the salary accounts. Cash account credit, salary account debited. Now cannot be written as a cash. It has available trial balance. Information included in the trial balance should be recorded as a balance brought forward in the salary accounts. Therefore, 36,000 now not as a cash, as a balance brought forward. This is opening balance. Step number 1 recorded already. Normally 4 steps should be done. Then balance part should be complete. Contribution of employee 4,000. Salary account debit, EPF payable account credit. This one recorded already. Therefore, now no need to record step number 1. Step number 2, 3, 4 should be done. Step number 2, contribution of employee, part of salary. Therefore, this one salary account debit, EPF payable account credit. Record second step, third one and fourth one. Contribution of employee value equal 4,000. Therefore, salary account debit, EPF payable account credit. Think about double entry. Therefore, salary account debit as EPF payable, name of other ledger account, and EPF payable account credit as a salary. That is a second step now. Step number 1 recorded already. Then think about third steps. Third one, contribution of employer for EPF. Another expense. EPF expense account debit, EPF payable account credit. 6,000. Therefore, EPF expense account debit and EPF payable account credit. Name of other ledger account as a description. EPF payable account credit as a EPF expense. That is the third steps. Think about steps. Contribution of employer, another expense. Therefore, EPF expense account debit, EPF payable account credit. EPF expense account debit, EPF payable account credit. Think about both contribution of employee and employer. Effect for EPF payable. Salary account debit, EPF payable account credit. EPF expense account debit, EPF payable account credit. Then ETF, only contribution of employer, 2000, another expense. ETF expense account debit, ETF payable account credit. Therefore, value equal 2000, ETF expense account debit, and ETF payable account credit. Therefore, ETF expense account debit as ETF payable, ETF payable account credit as ETF expense. This is the fourth steps. Contribution of employer for ETF, another expense. Therefore, ETF expense account debit, ETF payable account credit. Now think about, there are three expense account available. There are three expense. All the expense accounts should be closed. Salary account close. That value should be included under administration expense. Difference value as income statement. All the income and expense accounts should be closed as income statement. EPF expense account also same way. Debit side increase. Difference value as a income statement. As well as ETF expense also same way. Credit side increase. Debit side increase. Take that value credit side. And difference value as a income statement. All the expense accounts should be closed. Those are should be included under administration expense. And there are two liabilities available, EPF payable and ETF payable. Those are balance carried down. All the assets, liability and equity should be carried down. Therefore, difference value as a balance carried down. Here balance carried down. And here balance brought forward. This is value should be included under current liability as a EPF payable. And ETF payable also same way. All the liabilities, credit side increase, take the debit side, then difference value as a balance carried down. That value balance brought forward credit side. Therefore, there are two liabilities as well as three expenses, 5 marks available, should be disclosed in the financial statement. Salary administration expense, EPF payable current liability, ETF payable, ETF expense and administration, ETF payable current liability, ETF expense and administration. Then you have to know how to disclose in the income statement. Salary expense account balance equal 40,000. EPF expense account balance equal 6,000. ETF expense equal 2,000. Think about trial balance also given salary. This is not correct value. Correct value 40,000. Therefore, trial balance includes information cannot be included. Adjustment should be done. Salary available trial balance 36,000, but that is not correct value. As a salary and administration expense should be included 40,000. Adjustment should be done. And EPF payable, ETF payable under current liability. Those are liabilities. Second column. EPF payable equal 10,000. ETF payable equal 2,000. 5 marks available in the paper. Why we have to discuss like this adjustment? There are employee available in the business organization. After retirement, they will not be able to get salary from the business. They have to face some financial difficulties after retirement. Therefore, this is a legal requirement act introduced by the government. Therefore, fund available central bank, EPF and ETF, each and every month based on employee salary. For EPF, both employee and employer give their contribution. Salary එකෙන් අඩු කරගෙන යවන්න ඕන. රිටයර් වුණාට පස්සේ මේකේ සල්ලි ගන්න පුළුවන්. ඊට පස්සේ එතනින් එහාට ජීවත් වෙන්න පුළුවන් මේගොල්ලෝ. Therefore, in the business point of view, you have to know how to record in the ledger accounts. Contribution of employee and contribution of employer, ETF, then think how much paid in cash. After deducting contribution of employee, balance part paid in cash. That is called net salary. Sometimes it has given net salary, sometimes it has given gross salary also. Therefore, I will discuss gross salary next day. Sometimes it has given trial balance, gross salary also. Therefore, very important adjustment, definitely available in the paper. Try to recognize salary available in the trial balance gross or net. It is depend on contribution of employee for EPF. EPF contribution of employee also effect for salary. If it has not recorded net salary, if EPF contribution of employee has been recorded, trial balance it has given gross salary. That part I will discuss next day. ප්‍රශ්න තියෙනවා අහන්න බලන්න. Important adjustment. Question number 5, 6, 7, homework. 8 I will discuss next day. Question number 6 and 7 can be done. Only numbers change and percentage change. Question number 6 and 7 ගෙදරින් හදන්න. ප්‍රශ්න තියෙනවා නම් අහන්න. right ප්‍රශ්න නැත්නම් ඊළඟ දවසේ අපි හම්බෙමු. Good night.